Welcome back. In this video, we're going to be talking about something that's gone very overlooked in the Palantir story, and I want to thank all of you that have sent notes to me about this, wanting a full-on breakdown, and that's what I've brought together today. And I think this is super important because it's hitting at where Palantir is in the story of the company and where the market has sort of met it, but it's leaving out this whole other side of things. So I'm super excited to dive into that today and take you through it. So the thesis here of this video, and really what should be core to a thesis in holding the stock, buying more, or whatever you're doing with it, is that U.S. commercial is the obvious growth engine. We saw that in the quarterly numbers, but the market, we would say, is rightly focused here, mostly underwriting the U.S. execution path as it is. But the hidden upside is actually the rest of world, as Palantir abbreviates it. If you're reading the filings, ROW, of course. Commercial for them in that bucket has been flat and sluggish. And it's creating this, what you would call in the business, a free call option that essentially inflects as global AI deployment accelerates and compliance sort of clears. And there are many reasons why there are problems for rest of world growth and why US has taken sort of the first leg here. But I want to break down what I'm looking at. So this is a little all over the place, but basically it's just the numbers quarterly for the commercial total, US commercial and rest of world. And as you can see, in Q1 2025, it was down 5% year over year, while US was up 70%. And then for Q2 2025, it was down 2%. Year over year for US was up 93%. And so the mix is still very much skewed to US commercial. And United States revenue, 66% of revenue. UK is 11%. Rest of the world is 23%. Room to run outside of the US is the bottom line. You'll be able to see everything else much more clearly going forward. But that's really what it is, right? Is a few years ago, Alex Karp saw what the next few years were going to look like and said, we're closing down some offices outside of the U.S. We're doubling down in U.S. commercial, and that's moved the market cap 10x, at least, right, is what you can say. But the rest of world inflection could start now, basically. Regulatory fit in Europe. So the EU AI Act entered last year. I believe it's in the process, sort of logistically, of occurring, with obligations through 2026 and 2027. And Palantir's governance and auditability really targets these high-risk deployments that now actually need a lot of that traceability, documentation, and controls. As for sovereign cloud availability, Palantir, AIP, and Foundry are now certified on Oracle Cloud, including the EU Sovereign Cloud, which is really helpful for this data residency and sovereignty concerns. So continuing on here with the major points, the distribution advantage of Palantir working with Deloitte, Palantir getting more non-US feet on the street to build and prioritize rest of world cannot go overstated. And the repeatability of the AIP go-to-market strategy, Palantir's running boot camps at scale. There's no reason why this isn't not also inherently portable across countries and other sectors outside of the US. And they obviously know this. AIP adoption gap is a demand pull. European enterprises do lag North America in Gen AI adoption, not only just in the fact that Palantir was not made in Europe, but the companies in Europe are not using Palantir and the like. And that gap implies pent-up demand because everyone's going to need to be competitive. And the compliance constraints demand a governance-first platform that can actually unlock it. So there's a lot coming together here. Here are some more proof points. Of course, we have Airbus, which is a major EU and global partner of Palantir, has worked very well, emblematic of the foundry's success. BP, another one, 5-year enterprise agreement, doing AIP work for them. And NHS is a little less of a commercial, sort of traditional commercial contract, but expands that trust for Palantir, sensitive, regulated data and adoption. So, I mean, we sort of know all of this already, but it's worth restating. Merck, Japan, and Sampo, the joint venture there, and Hyundai, and there's really so much work that Palantir has done, which means they're entrenched almost, very easy to produce case studies, and really no reason why they wouldn't be able to expand further. So let's continue on here. The infrastructure unlock, I think, is what analysts aren't really understanding, is what changed is that Palantir, AIP, and Foundry are now on Oracle Cloud, which includes a lot of what's necessary for European buyers, so they can meet the residency and sovereignty mandates without, individual work for each customer or end user. And this removes a major blocker to actually scale. And many EU enterprises want AI in production, but are constrained, obviously, by the AI Act, the regulation, GDPR. Everybody knows this. But Palantir's on now some really stable infrastructure, and to be able to build in model governance as a compliant on-ramp, is that's always been the problem. So the market is still US centric, and that's the opportunity, right? Is we know that rest of world is flat. The spread shows where execution is price versus overlooked, and there's ample room to catch up outside the US as compliance and infrastructure begin to unlock. The company just raised outlook for the full fiscal year of 2025, and that momentum is still driven by the US, but a rest of world inflection is not in consensus models. That's why I'm making this video, is we need to understand what are the gaps, what are investors going to be talking about years from now, so that we can predict that and we can make money along the way, right? So Europe's demand setup, why now is basically the question. Like, the US has demonstrated an extraordinary ability and willingness to spend. EU is sort of not yet there, but there are reasons for it. So the AI Act is a big piece of this. So prohibition started in early 2025. High-risk system obligations will hit next year, and with the full regime in 2027. This is forcing buyers to favor audited, governed platforms. It's what Palantir was built on for the last 20 years. And the adoption runway is only about, a small, low single digits number of EU enterprises actually used AI in 2024, and that's because of the regulations that is just stifling that adoption. And so it's a huge headroom story as those barriers begin to drop. And as for the macro pressures, Europe's productivity and investment urgency amplifies the ROI. There's really just no reason why this shouldn't. So sizing the hidden upside here, just for an illustrative example, we're looking at Q2 2025 rest of world at 145 million to half a billion annualized as a starting point. So if the rest of world commercial compounds at 40%, which I don't know, we're just going to set that for sake of argument here, could be much higher. Let me just say that for 5 years, with all of the reasons we've stated, that would be 3 billion by 2030. And again, I think it would probably be much higher. The math on that is obviously 1.4 to the fifth power. And it's not guidance, right? This is just my numbers. So the rationale, we talked about it. I think like this sort of gives you an understanding of how in 5 years we can turn this $500 million into multiple billions. It's like it's in the millions right now. It will be in the billions in the future. And then you put a multiple on that and it starts to be pretty meaningful. And it's not even just what happens in the next 5 years. It's even beyond that, which is, what's the crazy part, right? So what we need to watch to see, when is this actually going to happen? We need to see more continental EU commercial logos adopting AIP, and we need the NHS FDP expansion metrics, basically anything that we're going to see there. The certifications and deals announced, a boot camp cadence, and of course, regulatory milestones, clarifying how Palantir is going to comply, how they comply relative to others, which is a big piece of this, how they're going to shape up competitively, which, in compliance is totally different than a product basis. But the risks is procurement drag, and politics has obviously been a problem in the past that they've fought through and ultimately worked in many cases, but it's sort of outside of our control. Competition and lock-ins. I'm less concerned here. Macro and foreign exchange is, always impactful to a lesser degree. So here are all my sources for this video in bringing all of this together and putting together presentation. We want to take a look at those. But in closing, I believe, bottom line, is the street is paying for U.S. commercial execution, and it's not paying for or playing for rest of world to actually work, which is a tremendous understatement on the team, on the technology, on the macro, on the like, it doesn't even make any sense to believe that AI is only going to be economically impactful and productive for America. It just doesn't even, even saying that doesn't even make sense. So obviously Palantir is going to capture billions and, maybe tens, if not hundreds of billions of dollars of market value in Europe and the rest of the world. It's that simple. And I think there's a lot of reasons why this is going to happen sooner rather than later. So I'd love to hear your thoughts. Bottom line is, if the rest of world commercial flips from flat to compounding, watch out, right? This is going to be another rocket ship. Palantir's second engine can carry the model beyond today's embedded expectations. So love to hear your thoughts. Until next time.